Okay, good morning and good afternoon, everybody. Again, my name is Nathan Dean. Welcome to the weekly financial policy update call here in Washington, D.C. We got a lot on our list, and for once this week, I'm not really going to talk about the drama that's happening over at the House. The one thing just to note is that the motion to vacate could come as soon as tonight. Marjorie Taylor Greene, the representative from Georgia, is meeting with Speaker Johnson at 3:30 this afternoon. Who knows what they're going to talk about, but if there is going to be a motion to vacate, just note that it will probably be anticlimactic in the way that there'll just be a vote and the Democrats will likely save Speaker Johnson's position and then we'll move on to other things. So with that, I'm not going to talk anymore about the House drama, but I will talk about what's happening with the FAA reauthorization bill. So this has to pass by May 10th. We talked about this last week, but just another update that, marijuana banking, stablecoins, Senator Durbin's Credit Card Competition Act, all of these things that people are trying to attach this FAA reauthorization bill to make it a Christmas tree bill, if you will, most likely not going to happen. We've seen statements from Mitch McConnell saying that he's against this. We've seen statements from Speaker Johnson that he's against the idea of creating it as a Christmas tree bill. And the big sigh that you're hearing is probably from lobbyists who are being told that, look, the FAA reauthorization is just not going to be one of those vehicles where you can attach it to and get it to the president's desk. Now, they have to sign this by May 10th. I'm not sure they'll get there just on the Senate side. So don't be surprised if they just have like a 3, 4, 5 day extension. Maybe they'll get it done, but it really depends on how many amendment votes that they have to go through and, the what each senator wants in exchange for his or her unanimous consent in order to speed things up. So, also, I want to talk about on the marijuana side. Well, last week we saw reports that the DEA is going to classify marijuana as Schedule 3 as opposed to Schedule 1. Now, if you are in these equities, you know that for example, the MSOS ETF went up 25% at one point before it was halted. But just note that if this decision comes out, and it will most likely come out, because what I've heard is that the DEA has actually already sent it to the OMB, and the OMB is actually taking a fairly fast timeline in terms of reviewing the rule before it goes back to the DEA. But then when the DEA announces its official decision, it comes out with a proposal comment period. Now, I think that comment period is going to be around 60 days, and then there are other aspects to this rule that is going to make things push out. So I think the fastest the DEA can do it, and this really is just up to the Biden administration, if they want to move forward with rescheduling it from Schedule 1 to Schedule 3, the fastest I think they can get it done is the tail end of this year, maybe even during the lame duck session. More likely than not, it'll have to be 2025 or 2026. The DEA Administrative Procedures Act process is a little bit different than what you see in the financial regulatory space, and as a result, you'll see it a little bit more extended and so forth like that. I've seen some people out there saying that this proposal could take over 2 years to do it. I think if the OMB and the Biden administration wants to move quickly, and that's what I've heard that they are trying to do is move quickly, I think they can get it done by the end of this year. And just remember, Schedule 1 to Schedule 3 doesn't mean the marijuana is decriminalized or federally legal again, or not even again, federally legal. It just means that you can use it for medical research. And also, if you are a marijuana equity firm, there's this thing called 280E tax relief, where your tax rate essentially goes from around 35 to 40% down to 5 to 10%. So there's some significant savings there. And the equities that we saw towards the end of that week certainly reflected that. So again, I'm not sure if that proposal is going to be out as soon as this week. I heard some people say OMB could even turn it back this past weekend. Probably not. OMB has about 30 days before they have to submit it back. So look for that to be in the next week or so. The more important thing, and probably the most important thing I wanted to discuss in the call today, is the Basel III Endgame. Now, this is the rulemaking that the Fed, the FDIC, and the OCC has put out. This is the last remaining rule of the Basel III Accords, hence the name Basel III Endgame. Over in Europe, they call it Basel IV. Here, we just call it the Basel III Endgame. Now, what this did is this proposal came out last year, and our analysis, along with a lot of the other folks out there, said that the capital requirements would increase substantially for the GSIBs, the Bank of Americas, the JP Morgans, and the Citigroups, probably around 19 to 20%, depending on what your number of calculation is. Now, for the regional banks, it's a little bit less. It's around 5 to 6%, and this is applicable to the banks that are 100 billion in assets and up. Now, when this proposal came out, there was broad, significant criticism, not only just from the Republican side, but also from moderate Democrats. There were issues with consumer lending. There was issues with, is this going to harm, credit cards and loans and so forth. There is even some issues here with solar lending and clean energy lending and so forth like that. And, the proposal came out. It's a very broad proposal. And what we heard from the Fed is, we hear you, we hear the criticism, we hear the comments. And in Jerome Powell's own words, he said, quote unquote, broad and material changes are coming. Now, when he said that, a lot of people, including myself, felt that broad and material changes also meant a reproposal, because under the Administrative Procedures Act, this is the act, this is the law that dictates how you do a regulation in the United States. I can't just say, for example, and put out a proposal and say, great, I'm proposing that this is a green cup. Now, in the final rule, if I come out and say, okay, I've changed it to red, then that's fine. But if I come out and say that this green cup is now an iPhone, that's too much, that's too many changes, and the law will actually come back and say, you got to go back and start over again. And so when they said broad and material changes, we thought that they were going to scrap the rule in its entirety, start over from the beginning, and put out another reproposal. Now, Katanga Johnson over at Bloomberg News just reported last week that that's not the case, and that the regulators are aiming to finalize the Basel III endgame by August. Now, how do you take into account broad and material changes, plus we're going to finalize it by August? And so what I did is I put some piece out on the terminal, but I'll tell it for you now, is that I think that there are changes to the market risk provisions and the operational provisions and the overall risk weighting, so that 19% decreases to something that's more in line internationally. Because remember, I said when they implemented Basel IV, generally speaking, it was around a 3 to 5, 6% increase in capital, certainly not the 19 or 20%. So if that number substantially decreases down to, say, 3, 5, 7, 8%, you may get something that's a little bit more in line, and something that I think Fed staffers will be able to say that will pass the court muster. Now, I think a court case is coming no matter what. I've talked to a lot of folks around Washington that just think that they're going to sue no matter what comes out. So maybe that's going into the calculus as well over at the Fed. If say, look, we got to get this out or at a certain time, or we're going to run the risk that President Trump wins in November and this work is all going to stop. Now, why August? Just keep in mind there is something out there called the Congressional Review Act. This is an act that allows Congress, through a majority vote of the House, the Senate, and the President's signature, to overturn any regulation within the last 60 legislative days, not calendar days, but legislative days. Now, nobody knows how many days Congress is going to meet, so we can't calculate and say this is the actual date. But a lot of people think that somewhere August 6th to August 9th is going to be that Congressional Review Act date. So the Fed, the FDIC, and the OCC, this is most likely the staffers being led by Fed Vice Chairman Michael Barr, have saying, look, we got to get our rule out by August 6th or August 9th in order to not run the risk that President Trump and a Republican House and a Republican Senate could overturn it. So we'll see. Now, if these changes are so broad and material that they think that they're going to get called out by the courts for not reproposing the rule, they could certainly come back and say, we just can't get it done. We're going to have to wait. We're going to have to repropose it and hope that President Biden wins going forward. But as of right now, I think the Fed and the FDIC and the OCC have the plans that we're going to finalize this. We're going to put it out. And also, we're going to make this more in line with the European standards to try and just essentially, A, get enough changes so that the courts are okay with it. B, get enough changes so that the Republicans and the Democrats are okay with it. And look, there are going to be the Republicans that are never going to be okay with it. But C, get the banks to buy in. Because I think the banks would buy in if you were to say that we're going to put this out there and more in tune with what Europe is facing. But again, it's a big if. A lot of people like to sue over regulation these days, so stay tuned. If you have any questions on that, please reach out to me on the offline. There's just a lot of stuff happening here. Like I didn't even talk about AOCI for regional banks. I think that's going to stay in there, for example. So go ahead, but I don't want to take this call forever. So just a couple other things to note really quickly. Robinhood just this morning it notified or announced that they are going to have, they received a Wells notice from the SEC. This is a notice that the SEC gives company where it says, hey, look, we're nearing the end of our investigation. And by the way, we most likely will sue you. Not always, but we're going to give you the opportunity to tell us why we shouldn't sue you. My colleague, Elliot Stein, just put his piece out essentially just about 30 minutes ago. I wanted to read it to you real quick. Said Robinhood said that it received an SEC Wells notice suggesting the agency intends to sue over crypto listings. However, Robinhood can manage the risk by paying a fine and halting the sale of certain digital assets, or they can fight it in court. Neither scenario, Elliot believes, is a material aspect. And so as a result, just to give you a little bit more flavor of what what Robinhood is feeling there. So the last two things I want to talk about. You could see that executive compensation proposal that I talked about last week could come out as soon as today. Bloomberg News was reporting over the weekend that the FDIC could announce that at any time. The only other tidbits that they put in there is that a lot of the discretionary aspects of the 2016 proposal have now become requirements. But again, the Fed is not on board with this, and as long as those, there's no consensus among those six, I really don't think that you're going to see the FDIC or the OCC move forward and finalize this and then build some type of regulatory arbitrage. This is more likely a political exercise in my view. And the last thing just to keep in mind, the CFTC is going to have an open meeting on May 10th. These don't happen very often. That's why I'm actually kind of excited about it. But they are going to vote on a proposal about banning event contracts. Namely, look, if you're in predicted, if you play around with predicted or you play around with just what the traders are betting on in terms of who's going to win the election, we actually have all this stuff on the terminal, but the CFTC is most likely going to move forward with a proposal to ban that. So with that, I know that's a lot. If you do have any other questions, please feel free to reach out to me. It's ndean10@bloomberg.net. And I just want to say thank you again for attending, and I wish you a great week. Thanks.